Hi, I'm Ed Parcut, your host of Inner Edison, and what I'd like you to take away from today's show is our greatest growth comes from our greatest failures. Today's guest is Daniel Blue. Let's welcome him and get to know his journey. How you doing, Daniel?
Ed, I'm great, man. I love the American flag in the background. I don't know if your audience can see, but I got me a America shirt right now. So America.
Yeah, mine's about I have veteran suicide on. I'm a vet. I don't know if you know that, but so I'm real into that because I was a veteran, right?
Appreciate the service, brother.
I'm sorry?
I appreciate your service.
Thank you. But this isn't about me. This is about your story, but I appreciate it. For most of my listeners, they might not know who Daniel Blue is. Great name, though. I mean, that would be
my real name, too.
I know. You should have went in acting, man. That would be a perfect name.
That's a fake name. What's your real last name? I'm like, I'll show you my ID. It's Blue.
All right. So what's your I know your story about when you were younger. You want to just get into that real quick and then your journey, and I'll pick things up from there.
Yeah. Okay. So 18, Ed, was a big year for me. I call it the trifecta. So at 18 years old, I dropped out of college. I got a girl pregnant, and we were both 18 at the time. So I got my mother, or the mother of my daughter, pregnant. And then I got addicted to Oxycontin. So a lot of things happened at 18, right? Dropping out of college, having a kid, getting addicted to Oxycontin, and you're still trying to figure out life when you're 18. You think you know it all. However, you know Jack, right? So got into sales at 18 years old and made pretty good money. I was making six figures. I didn't come from a family with money. So naturally I have, what I'm thinking is a lot of money. I think people can probably relate to this. When you want to make $100,000, you think that's it, right? Like if I can make $100,000, like that's it. Like I made it. And then you make $100,000 and you realize that ain't shit, right? So I was able to crack that $100,000, but because I didn't grow up with money, I didn't know how to manage it. I didn't know how to spend it. So I bought a house in 2008 at the peak of the market. And we all know what happened, 2008, 2009, the Great Recession. So let's just say between 18 and 20, I failed a lot. I lost my house, got addicted to drugs, had a kid, dropped out of college. But I kept fighting. I look at my mom. My mom raised me on her own pretty much from the time I was 12 and on. And my dad moved to Mexico from the age of 12. So, seeing divorce and seeing separation and losing my father at that time, I was struggling. And I always saw my mom never complain. I mean, she worked every single day as a social worker. She worked Child Protective Services. So she was in and out of jails, interviewing parents that just got arrested for a DUI and lost their kid because their kid just went to shelter. So she was doing some rough shit, and she never complained. She never talked shit about my dad. She never did the woe is me, played the victim mentality. So, a lot of where I'm at today in terms of being able to kind of turn my situation around, I definitely attribute to, my mom.
And I think looking back, a lot of this, because my story is I lost my dad at 12, hairy cell leukemia, Agent Orange, Air Force. So, I mean, we moved to the wrong side of the tracks. We went from being decent to nothing. And so when you come from nothing and then you start making money, first thing you don't know how to do is how to manage it, how to deal with it. First thing you want to do, I got to buy this, I got to buy that. And then you don't realize I'm going to make $100,000. But then, back then, I think the tax rate was probably much higher than it is now. And so you probably figure that, 30, if you're self-employed, 30 to 40% goes away. So you only get 60 of that. Right.
Yeah. And let's just make myself look even more foolish. Right. I'm 32 years old. So this was 14 years ago. I remember at my first paycheck was $3,000. That was one of my first big paychecks in terms of commission. And I remember this is the time where there was no direct deposit, right? Like you'd go to, HR and you'd go pick up your check, right? There was like a line of people that would pick up their check on Friday, right? So you're in that line, and then you go to the secretary or whoever was passing out checks. She gives you your check. You're opening it up, and the anticipation was there. I knew my commission equated to about $3,000. So I'm like, hell yeah. I open up the check, and on the front of the check, the actual check itself, it said, I think it said like $1,700, $1,800. I was like, bro, what sale canceled? Like, what happened to my commission? And then I turn it over showing like all the taxes that got taken out. So I see that, I made $3,000, but I only took home $1,700. And my boss behind me, my team leader, he goes, he hears me complain about where my money went. He's like, oh, bro, just file exempt. You're good. You'll keep the money. I was like, Man, that sounds great. So I filed exempt that year, and we know how the story ends.
Yeah, I know the story.
A massive bunch of debt from the IRS at 18, 19, 20, and then had to learn my lesson there. So let's just say I learned a lot by touching the stove and getting burnt, and learning from my mistakes.
And that's good. I mean, that's how you're supposed to. When you don't have that person there to help you learn along the way, you're going to make these mistakes. And that's why and that's okay, because as long as you can learn from them, and then as you get older, you can teach somebody else what you learned, right? Help them out, right? Yeah. I just, so you know, my background, mortgage industry, worked for many companies. At the time, everybody was 1099. And during 2000, we'll go back. I'm old. In the 90s, the top sales guy was making 600 grand. The next guy was 500. The next guy was 400. The next guy was 300. And they weren't paying their taxes. Right. So you think
they're balling.
Yeah. You think you had a problem? They had a coming to Jesus like you would not believe.
I don't believe it.
Yeah. And so, I mean, but that's things that you learn along the way, because even as a business owner, you can do things right. And then all of a sudden you have these taxes you don't know about, or you can only plan so much. You get stuck in your business. You're not thinking about getting these other people to help you. Yeah. So let's get back to you. Sorry.
Yeah, no, I mean, you have to surround yourself with the right people. Right? I mean, I think that you and I both know there was people that touched the stove, got burned, but then they keep touching the stove, right? They just get in their own way. And a lot of it is, who are you surrounding yourself with? Are you surrounding yourself with people that are doing things at a much higher level than you, and you want to strive for where they're at? Or are you hanging out with losers and, going to their level?
Right. I mean, you always are supposed to hang around with people smarter than you and making way more money than you. Constantly. That's how you're supposed to. That's what I learned when I was younger in sales, right? Which I think a lot of times people don't learn these days, the soft skills and other things that you need in life, right? I mean, if you look, and I'll go back to our kids right now, they text each other. They don't even know how to talk to each other, right? How are they going to deal with this when they become of the age and they have to do something? Some of my kids are good. My son is really good. He's in the Air Force. I'm in the Army, but he's good. He can talk to people. I tell my daughters, they'll text for days before they actually pick up the phone and actually answer a conversation that could have been done in 10 minutes.
Yeah.
Right?
And so much gets lost in emails and texts, right? Like, I'd rather just pick up the phone. I'd rather just see you in person to, actually have that good conversation.
Yeah, that was a few of my staff over the past couple of years. This is because we've been so busy. They're like, I emailed them. I don't call them. Get the answer now. I would email. They're not going to see that email for hours. They don't sit there at their desk hitting their button like you do.
Yeah, exactly.
Yeah. Anyway, so all right. So what sales were you in at the time?
I was selling real estate coaching. And that's how I ended up getting into the space I'm in, the business I own. We help people access money in their retirement accounts, penalty and tax-free. And I remember when I was selling real estate coaching in my early 20s, I'd hear people, the real estate investors say, yeah, I just use my retirement account to flip a house. I just use my retirement account to buy a rental. And I'm like, wait, what? I thought retirement accounts were just for mutual funds, were just for stocks. So this whole world opened up where I got to learn that people could leverage and use an IRA and a 401k to invest outside the stock market. They could use the money to maybe start a business, invest into real estate, crypto, precious metals, just way more than what Wall Street wants you to know.
Right. Because, and I want to get into that, but before I do, because a lot of, I want to talk like Robinhood and some of these accounts, because people get them and then they buy some stuff. They put 10 grand in there and all of a sudden it goes up to 50 if they're doing crypto or whatever. We'll just use an example. And then they sell and they go, what do you mean I have to pay taxes on $40,000? Right. It's not tax free because it's not an IRA. It's not a 401k, 403b, any of those other things that you can invest and sell and buy and not have those same things. And a lot of people don't realize that it's not that until you take it out of the account, it's once you sell what you bought.
You realize that gain. Absolutely.
Yeah. And I mean, and it's funny because it's going to piss off some people, but you see some people who are liberals and then they go, and then they do this and they're like, what the heck? That's taking money out of my account. And then all of a sudden, what, you're a Republican now? It's a joke.
Yeah,
sorry. It's very concerned. It's important to pay taxes to a certain point, but you shouldn't pay more taxes than you need to.
Yeah, I mean, we pay enough money, right? You go to the store, there's taxes. You are paying taxes all the time. Like, why should we have to pay more than we need to, right?
Right. Where are you located?
I'm in Vegas. So speaking of, low taxes, Vegas, baby.
Yeah. Speaking of high heat, Vegas, baby. I'm in California.
Yeah. Oof. See, I grew up in Oceanside. What part?
Oh my gosh. I was stationed at Camp Pendleton.
Oh, man, respect.
In the 80s, yeah, late
Yeah.
80s, early 90s.
Yeah, my wife, her dad was a Marine, and like a lot of my homies, they, Oceanside and Camp Pendleton are like one and the same. So, a lot of my friends, they grew up on base, and it was good times.
Yeah, I mean, I was down there for 20 years before I moved back up here in 2002.
Yeah.
Yeah. So, So, I mean, the only thing I miss about there is the 70-degree weather.
Oh man, it's changed too. Like, I'm 20 years removed from Oceanside, and it was like cool little surfer town. And now it's like San Diego, like one-way streets and bars and restaurants. So it's changed a lot.
Yeah, that Roberto's is no longer downtown.
Man, did you ever eat at Colima's?
Uh-uh.
Oh, that was the spot, man.
Oh, see, I was a Roberto's guy, man.
Okay.
Even Herberto's and Rubber, when they got mad at the guy.
There you go.
That was just me at Carne Asada Burrito. You can't get anything outside of San Diego Carne Asada Burrito. It's not the same.
Yeah. So, Amen.
All right, all right. So, what you learned in the real estate stuff got you to be able to, because when being in the mortgage industry, the accountants that we have, and I still have them, they're like, hey, you can do this type of plan and you can do what you just talked about. So I want to get more into that, because a lot of people don't understand that you can actually use an retirement investment to do these investments because I knew a lot of people during the downturn actually took the money out of their 401k or 403b and just took the money out and then paid taxes on it, was buying and flipping houses. But there's another way where you can do this without having to do that. So you want to kind of get into that, or is there anything else you want to talk about before then?
Yeah, no, if we get right into the nitty gritty and add a bunch of value, the one account that you're going to want to pay attention to is what's called a solo 401k. And that plan is for entrepreneurs who do not have any W-2 employees other than themselves or a spouse. And what makes this account really cool is you can access the money penalty and tax free, and you can use it however you want. There's a loan feature on the plan where maybe you want to use it to start a business. One of our customers, she wanted to start an online business. She was running a great clips of hair salon for a number of years and wanted to quit that job, got sick and tired of it. And she needed about $20,000 to get some inventory to get her online business going. And she had money in an account with Charles Schwab and asked her financial advisor, hey, can I take out $20,000 for my business? And of course, he's naturally against it. So he's telling her not to do it. And she's like, well, it's my money. Like, I want to use my money for my business. Like, I want to use money for something that I can control. In the stock market, I really can't control. So when she got to us, we were able to teach her how she could take her IRA, move it into a solo 401k, tax and penalty free. And then she was able to take out $20,000 penalty and tax free, use it to start her business. And now she's working full time with her online business, and she's not having to deal with her 9-to-5. She quit her job, and she was able to actually pay back her retirement account. So she replenished it, and she didn't rob from her future. So the concept of a self-directed retirement account is just like it sounds. Like, you can direct the money where you'd like: crypto, precious metals, private equity, private lending, flips, rentals. And there's a self-directed IRA, and that's pretty common out there. I'm sure, Ed, you're familiar with that. But what a lot of people are not familiar with is a solo 401k. And that account is self-directed. You can use it to invest outside the stock market. However, it has that loan feature, unlike an IRA, where you can use the money to personally benefit you, such as starting a business or maybe paying off high interest rate credit card debt. We deal with a lot of people that are paying 20% interest, 15% interest on their credit card debt. Meanwhile, their retirement account is making them 5, 6, 8%, 9%. Well, I mean, if you're losing 20% to the banks on your credit card debt and you're only making 8% with your retirement account, you're losing money faster than you're making money. You're going backwards. So maybe paying off your credit card debt is what's keeping you up at night and stressing you out. So let's pay off that credit card debt.
Now, the self-directed, we'll just talk about the solo 401k, right? You still have a max you can put in there per year, right?
Yeah, so it's $58,000 per year, and that's dependent on the amount of income you generate with your business. So you can take $50,000, $500,000 from a 401k from an old job or an IRA. There's no maximum there. You can take that money and convert it into a solo 401k as long as you qualify for a solo 401k. And then from there, if you want to add new money to the plan, you can contribute up to $58,000 per year. And you compare that to an IRA, which an IRA contribution limit is $6,000, $7,000 a year. It's massive difference.
Is that a percentage of your income that you take, the 58,000?
So it's $19,000 to $25,000 per year as an employee. since you're the employee of your LLC or S Corp, and then an additional 25% of the income that you receive, no more than 58,000 total.
Okay, so you can put in 19,000, and then you can put in 25% of what you actually earned as income.
Correct.
All right. Man, that's actually really good.
Yeah, especially if you do Roth. A lot of people know that if they make, and this is for the person listening to this that makes more than 130,000 single or 200,000 joint income, you can't, for the most part, contribute to a Roth IRA. The IRS says you make too much money, but you actually can contribute money into a Roth solo 401k no matter how much money you make. And a lot of people love that because a Roth is a powerful account, right? A Roth solo 401k or a Roth IRA is post-tax. You're paying taxes on the money you put in. So you're paying taxes on the seed, but then that harvest as it grows is 100% tax-free. So you can have a bucket of money that ends up accumulating to hundreds of thousands or over 7 figures. And all of that money is 100% growing and going to be there for you tax-free.
So when you pull it out, you don't have to pay taxes on it? Oh, really?
Yeah.
Wow. Now, there's no way, excuse me, like if somebody had a Robinhood account and they made a lot of money and say 80,000, they can't just drop that into a solo IRA or any of those kind of things because they didn't put the money in there from an IRA or a Roth 401k, right?
So my understanding, Robinhood does not offer retirement.
I'm not talking them, right? Yeah. I'm just saying if they had that money in another account, they can't set up a self-directed 401k with that money because that was never part of that whole system, correct?
Yeah, yeah, exactly. If that money was outside of a 403b or 401k or IRA, then yes, that would just be a non-qualified, account that it cannot get converted into, a solo 401k or IRA.
All right. So if somebody, here's an example, has let's say an LLC that they have because this company controls the proprietary names of stuff so they have here, I'll just say I have a mortgage company, right? I have podcasts. I have a bunch of other stuff. I do radio show stuff like that. I have a LLC that's called Big Hangry LLC, and it actually owns all the rights to the names, right? Trademarked, all that kind of stuff, right? So if I'm paying that company to do stuff, I could set up a solo 401k there, right?
Would you have any W-2 employees in the picture, full-time W-2? No. Then yeah, you could.
No, that's a separate. It's an LLC, and it's what's that single entity? It's just me, my wife and myself, yeah. Right?
Gotcha.
As an example, so I could set one of those up. I could put 19,000 into a self-direct, whatever you call that,
solo 401k.
Thank you. Yep. And then any income. So I took another 100,000. I could take 25 grand, throw it in there also. Then my tax base is only 75,000.
Correct.
And still have what I get from the mortgage company, which is a totally different corporation, has employees, has other stuff that I can't do this type of thing.
So this is where it gets a little murky. If you have W-2 employees in any of your companies, the IRS looks at it as a controlled group. And whatever you do, they're going to require that you offer to your employees. So technically, and this is where you're going to want to make sure that you follow the rules, the DOL, Department of Labor. Again, anything you do, you're going to have to offer to your employees. So technically, Ed, you wouldn't be considered a solo 401k candidate because you have W-2 employees with another company. Even though it's a separate LLC, the IRS can be like, well, Ed, we don't care. It's the same owner. It's a controlled ownership group. So at that point, you would just remove the word solo, and you could have still a self-directed 401k with the company that you're mentioning. You would just have to go back to your employees, your W-2 full-time employees with your other LLC and be like, hey guys, I'm setting up a self-directed 401k. I have to let you know that I'm doing it. Do you want in? And it's on them if they want to participate or not.
Now, can you have two companies with two different types of 401ks? Because in California, they passed a thing that you have to give your employees access to a 401k or 403b, some type of retirement account. If you don't, the state of California will do one for you, and it's an IRA, and it's horrible. Huh. So it's like five. I think it's 5 employees or more, So my question is, you want to set them up with a good 401k. Can you have 2 separate ones in 2 different companies?
Yeah, so this is where it gets tricky, and
I know these are unique
yeah,
situations. I always try to push the envelope legally.
I get it, brother. I
Right?
get it. And I always like to just be real with people. Like, my lane is solopreneurs, no W-2 employees. So, this would be somewhere where I'd bring in one of our affiliates, and they could come in and kind of, do some questionnaires with you, and really take things from like a nerd level, because we don't deal with companies that have W-2 employees, but we do work with a company that does. So I don't want to give, false information and give you, fake news.
But now my wife could, if I wasn't on that account.
Yeah. Does she have ownership in these other companies?
No.
Okay. Then
Because then you could set up, but then it would be another retirement account for her. So how would it help me? I tell you, I could be an employee of it, right?
I don't see why not.
Yeah. And then she could offer the 401k to me, and then I could set it up for myself. See, who messed this up was doctors, right? Because doctors back in the day, they had their medical, established, and had their employees underneath it, and then had a separate entity for themselves to put all their money into in the retirement and stuff for years. And they probably are the ones who messed it up for the rest of
yeah. IRS, like, you're doing all this cool shit and you're not offering it to your employees. Yeah, we're stopping this.
All right. So solo 401k, no good for me because I have employees with another company. See, that's why I was thinking that whole idea, because I remember that doctors and stuff back in the day were able to do it. I don't know how long it's been. Now, is there a profit sharing plan or something else like that you could do the same thing with, or you just only focus on the solo 401ks?
Yeah, we should set up solo 401ks and then self-directed IRAs. We do a few of those, but just because we're attracting people that, have a side hustle, have some kind of consulting, maybe you're a realtor, maybe they get 1099 commission, they're just an entrepreneur with no W-2 employees. Like, that's who we want to get in front of. We're going to set up mostly solo 401ks with an occasional self-directed IRA.
All right. So question for you. So back to my situation. If I did that LLC and I set it up, I know I have to offer them a 401k, but they're not going to make any money on the other company because they're not an employee of the other company. So how do they get that same 401k?
Yeah, they would just, so for example, like me, let's use my as an example, Quest Education. We have a 401k plan for my employees. I've got another LLC, Blue Consulting. I can't set up a 401k with Blue Consulting and then not offer it to Quest Education. So, I'm just using my real life experience. Right. I only have one 401k plan for my employees and not two. So I don't know. And that's why, I'm being.
No, I was just looking for another way to put more money away. That's all I'm trying to do.
Yeah, no, the way that I see it would be setting up. I mean, do you offer a 401k plan with the company with the W-2 employees?
Mm-hmm.
You do? Okay. Yeah. So you can't put 58,000, or the amount of money into a 401k plan with company A and then put the same amount in company B and add it up. Like, it's spread out over all of the 401ks combined.
All right. So then let's say this. So if I say I had a corporation with 3 employees, right? As an example, it's not a large company. It's a small company. But I have W-2 employees. So you would say you couldn't even, I'd have to do a self-directed 401k, right?
Yeah. And then they would have to be offered a self-directed 401k.
Right. But then they would have to put their own money in it.
Yeah.
Right. And then a percentage of so it's not a big deal to offer them the 401k. It's just the fact, as long as, do most people match those 401ks when they do this? That's
where there's some kind of matching in place. And again, not all employees are even going to take up, not all of my employees take up the offer on the 401k. Most of them do, but it's up to the employee. You just have to give them the option.
Right. I just want to be clear. So people who are looking to set these up, because a lot of people are looking, hey, how else can I protect myself? How can I protect myself? And that was one of the reasons I set up the LLC for the rights of the names, because you never know if something happens legally. You could wipe out the company, but you still have the name over somewhere else, right?
Yeah, exactly.
So, yeah. Just trying. Had an LLC attorney on a couple of shows ago, and he was like,
yeah, I can only imagine that conversation.
Yeah, I could have went on for hours. And actually, I'm going to have him back because he talked about a Wyoming LLC versus other. Yeah, have one control. This controls these other ones, and this, and can't pierce the veil and all this stuff. Yeah. Had so many people comment on TikTok because we split these up, and they're like, "That's just trying to," and it's like, no, you're trying to protect your assets. It has nothing to do with getting away with, That's all you're trying to do is protect yourself, because people don't understand until they have money.
Yeah. It's easy to just, judge without having experience and firsthand knowledge.
Right. All right. So then you brought up Quest, your company. What does that do?
Yeah. So Quest Education, we've got customers in all 50 states, and we educate people on solo 401ks and how they can use these accounts to either fund a business, pay off debt, be able to invest outside the stock market, like in real estate. So basically just pulling back the curtain and teaching them how these accounts work and how they can get fit in within their life, and hopefully solve some issues and provide some solutions.
So how can they find you?
Best place is danielblue.me. That's my website. And on my website, I've got my book. Just came out with a book 2 weeks ago. It hit bestseller on Amazon. It's called Blueprint to Your Best Retirement. It's really like simple, maybe 100 pages. I wanted to put together a book that was just simple to understand, wouldn't bore people to death, and they could implement information after reading it, so they can get access to the book, access to my podcast, How Winners Win. And then if you do have a 401k from an old job or an IRA, and the idea of tapping into it, penalty and tax-free, appeals to you, then there's a link to my website, Quest Education, where you can fill in some information, and someone from my team can reach out, give you some education, and see if we'd be a good fit. And then all my social media handles are on the website as well. It's Daniel Blue, BLUE, like the color, .me.
Yeah, I just want to make sure they had that information. But what people don't realize is when you're putting money in these, in any type of these, in retirement or whatever, IRAs, 401ks, whatever it is, I had a client who his house wouldn't sell, right? It kept falling on escrow, and he wanted to close on this other house. He was getting an amazing deal on it. He had a 1.3 million 401k at one company, and he was able to, and he transferred it to a different company. And then they took 500,000 out during that transfer. Once it was over there, he was able to put that down for his down payment. And then his house sold within 30 days, and he was able to put that money back in without any tax consequences. When he was trying to do that, when it was at the company it was at first, they're like, well, you're going to have to take out 600 to get the 500, and there's tax consequences. So there's what people understand. There's just so much you can do with this stuff that they have no idea, but you need to start investing in them early, especially we found this out much later in life, but I tell my kids, if you put money in a 401k from the date that you start working until you're 30, I don't care how much you put in there after that. And not put another dime in there. I don't care how much money you put in there from 30 on, you'll never catch it. Right.
Yeah. It's compound interest and over time. Yeah. It's huge. And even if you are 30 or 40 and you don't have much set aside, like start now. Even if
you're 50, put stuff away. It doesn't matter. So most people are working, they don't want to quit working. There's so many different things they're doing. And for me, that what I have access to now, I didn't have 20 years ago, right? There was none of the same stuff, but people have. If I want to find something out, I can find it out in 5 minutes how to do something.
Yeah.
Right?
YouTube University is amazing.
Yeah. There's just so much information out there. In my field, unfortunately, 90% of it's wrong. Yeah. In the mortgage industry, it's all, people, I heard you can do, and it's like, no, you can't do that.
Yeah. Same with ours, right? I think anytime you're in the financial game, you do have those people that are just, saying a bunch of stuff to just hype people up, and just, they don't care if they're misleading people and, telling people wrong information just to make a sale. And you got other people that actually care about making impact and want to provide facts and, information that can help people. So it's that 80-20 rule, right?
Right. And it's actually, I think it's 90-10 now,
the
way things are. It's for me, I just want to help people build personal wealth through home ownership, right? Because most people do not have a 401k, 403b, IRA, even though I tell them, do this, get it a separate one. But one of the things that I brought up about the state of California, right? They push you into a not self-directed, but they push you into it's an actual IRA, not a 401k, not a 403b, even though they name what it is. And what people don't realize is if they have another IRA they were putting money into, and they have the California one that maxes them and it goes up 1% each year, they could totally be messed up, because now they're putting into two IRAs the same amount of money that they're only supposed to be putting into one.
Yeah. 6,000 is the cap unless you're over 50, and you can put 7,000,
Right. But they don't know this. And that's the problem with what government does when they come out and try to help. I think it was Ronald Reagan says the most scariest thing is someone knocking on your door and says, I'm here from the government, I'm here to help.
Yeah.
Right?
Exactly.
I got all those quotes. But I really appreciate, I know you have more information about this, and that's why you educate people. And if you guys are watching this today or listening to this, I want you to reach out to Daniel, find out his information, because I think, I don't want to think, I know this could help a lot of people who are self-employed and they only have one job, not multiple companies. But they still could offer a self-directed IRA to their 401k to their employees, which is a good thing to do anyway. Even if you're not mandated to do it, you should still offer it.
Yeah, I can't tell you how many people, and the same people that are in the real estate space that don't even know that a self-directed retirement account exists, that they could use their retirement account to invest in real estate. Like, they've always thought retirement accounts were just for stocks. They had no idea they could invest into promissory notes and private lending and flips. So there's a whole world out there that Wall Street does not want you to know about.
Yeah, because then they can't control it, right?
And they don't make money.
That's right. My internet is starting to slow down on my side. I guess too many people in the buildings actually using it. So, and I'm direct connect, so I don't get it sometimes, right?
Yeah.
All right, Daniel, I really appreciate you being on. Anything else you want to drop today? Or you?
Yeah, man, if you want to learn more, danielblue.me is a great place to start. A bunch of free resources there, and want to be able to help out as much as I can. So if I can make you think a certain way, or just add a sentence or two that changes your perspective and get some knowledge in your brain to get some better results, that's why I'm here.
All right. Are you on Instagram?
I am.
Is it Daniel Blue?
Yep, Daniel Blue. And same on Facebook. See a gentleman with dark features, Las Vegas. That's me. I'm pretty consistent on Instagram and Facebook, just trying to add value. So definitely check me out there.
Yeah, because we'll have to check you out. I'm coming there again in October. I'm actually might be there again in September. I don't know, end of the month. Different events coming, kind of thing. Yeah. So when next time I'm there, I'll hit you up.
Yeah, hit me up.
All right. Hey, I want to thank you for joining us today on Inner Edison. I hope you enjoyed today's episode and what our guests learned from their journey and what they do. Please like, share, and subscribe. And again, thank you so much for being here today. Thank you, Daniel.
Thank you, Ed.